let's get right to Meagan Phelps, founder, Empress Investment Groups, to talk about the preparation for the retirement. And of course, as we are waiting to hear more on rates, and we've seen a lot of volatility in the market, what have you been telling the clients? I mean, I'm sure some have called with some concerns about the sell-off we've seen in 2022.
Hi, Nicole. Thanks for having me. Yes, absolutely. We're seeing a lot of concerned investors, and rightfully so. We have soaring inflation, rising interest rates, obviously new lockdowns in China, which are worrisome, very volatile stock market, and of course this tragic and unfortunately intentional humanitarian crisis that we're seeing in Ukraine. So as you can imagine, clients are calling. I will say, surprisingly, they seem much more level-headed than they did in March of 2020. Clients tend to be sticking with their plan, being much more proactive rather than reactive to these market environments. So I'm pleased to say that we don't have any panic selling yet.
Well, that's good. And hopefully you won't have any panic selling at all, right? Because that's not what you would be telling them, I'm sure. I'm sure, you know, there's a lot of diversification and really a balanced portfolio. So what does a balanced portfolio entail at this point?
I think the balanced portfolio, obviously you have to have exposure to various market sectors. All of our clients are aware, if you have exposure to the market, you have to be ready at any time for a 10, 15, 20, sometimes even larger drawdowns. And the problem remains that if you're close to retirement or near retirement, you want to make sure the number one concern retirees have is outliving their income. So ensuring that if you are going to be taking distributions from the portfolio to generate income, that you're not realizing losses to do so, because that obviously will impact the longevity and the sustainability of the portfolio long term. So focused on exposure to various market sectors and ensuring that retirement income isn't subject only to market performance.
Right, yeah, and as you take a look at the different sectors, for example, those who have had energy are probably pretty happy with what they've seen so far in 2022, right? They've seen stocks go up, they've gotten great dividend payouts, but the last 10 years they didn't. So they've had to have some patience. Why they didn't in the same way that tech, for example, right, saw a gain. That being said, are there sectors that you lean towards a little more now or less based on the current market conditions?
Sure. Vast majority of our clients favor right now being a bit more defensive. We see, obviously, with all of the volatility, we want to, especially for our retirees, make sure that we're not subjecting them to potential declines of 20, 30%. So erring on the side of caution, we like defensive names. We like utilities. We like the healthcare sector. We like consumer staples. Why? All of those tend to perform well in various economic conditions. You need power, you need electricity, you need food, you need beverages. So those names tend to be a bit more stable. They oftentimes continue to have growth and pay dividends sometimes. So we really like more of the defensive names right now.
Yeah, understood. And you're recommending Roth conversion, tax harvesting, and rebalancing. Tell us a little bit about those.
Absolutely. So Roth conversion comes into play for a lot of our clients because most investors are concerned about taxation, right? We know we're $30 trillion in debt now, rising by the second. In addition, we know that tax rates that were enacted in 2018 are set to expire in 2025, will revert in 2026 to higher rates, federal marginal tax rates likely to go up a couple of percentage points, and that's impactful for retirees and investors. So Roth conversion, essentially what it is when you have pre-tax retirement accounts that you funded, 401ks, IRAs, you can convert those dollars over into a Roth IRA. Now, of course, that does result in a tax liability on the conversion. But the benefit of doing that is if you believe tax rates are going to ultimately be higher in retirement, you're repositioning those dollars to ultimately generate tax-exempt income in retirement. because distributions from Roth IRAs, so long as you follow the rules, come out tax-free. Now, I think we make a strong case for looking at conversions right now. We have the NASDAQ down approximately 18%, S&P 500 down 13%. So if you're looking back at, say, an IRA from November of 2021 that was valued at $100,000, it might currently today be valued at $80,000. So focusing on converting those dollars now to Roth IRA, you're only paying taxes on $80,000 instead of $100,000. And ultimately setting yourself up for a tax-free income down the road.
Thank you so much, Meagan. Nice to speak with you, particularly during this volatile time for investors. We appreciate it very much. Meagan Phelps of Empress Investment Group. Thank you.
Thank you.